You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by Purepoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit purepoint.ca to access in-depth market briefings, sector analysis, and the inaugural Behind the Curve report, understanding when and how the uranium market turns. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's June 16, 2026, and this week on Uranium Spotlight, growing concerns over Western uranium security, India's accelerating nuclear build-out, and two significant corporate developments from Energy Fuels and Forces Metals. The uranium spot price closed last week at $84.95 a pound U3O8, essentially unchanged from the previous Friday's close after opening the week at $85. While the market spent much of the week drifting lower, targeted buying interest late in the week helped prices recover nearly all of the lost ground. Spot activity remained relatively subdued, with roughly 500,000 pounds reported traded through 7 transactions during the week, reflecting the seasonal slowdown that often develops as summer approaches. Despite the quiet week, the broader market picture remained constructive. Through the end of May, nearly 26.8 million pounds U3O8 equivalent had transacted in the spot market, a 24% increase over the same period last year. Financial players and traders continue to account for the majority of activity, purchasing approximately 22.5 million pounds so far this year, while utility buying remains relatively limited. Financial entities alone have acquired roughly 11.8 million pounds, led by significant purchases earlier in the year by physical uranium funds. With the long-term uranium price at $93 a pound, it leaves a meaningful gap between spot and term pricing. That discount continues to support buying interest wherever spot prices drift lower than the low $80 range. Market observers also note that several producers reporting weaker than expected production may eventually need to return to the spot market to satisfy contractual obligations, potentially adding another layer of demand. For investors, the key takeaway is that while spot prices appear range-bound, the underlying supply-demand balance continues to tighten. Financial buyers remain active, term prices remain elevated, and any return of utility or producer buying could quickly shift the market sentiment. There was a flurry of uranium-related agreements announced around the world last week as governments and industry participants moved to secure future nuclear fuel supplies. Among them was a partnership between Russia and Tanzania aimed at advancing a stalled uranium development project reportedly worth roughly $1 billion. Saskatchewan and Czechia also announced cooperation on nuclear technology, reactor development, and uranium supply, highlighting Saskatchewan's position as home to some of the world's richest uranium deposits. What stands out, however, is who's missing from the list. While countries such as India, China, Russia, and France continue to pursue uranium supply agreements, project investments, and strategic partnerships, the United States has remained comparatively quiet on the international uranium acquisition front. At first glance, this might not seem unusual, but in a market increasingly divided between Eastern and Western supply chains, it could become an important issue. The long-term uranium price recently moved to $93 a pound, while major producers continue to indicate that new contracts are being signed at substantially higher levels. At the same time, countries with aggressive nuclear growth plans are actively securing future production. India, for example, has publicly stated its desire to secure all available uranium supplies it can obtain from major Western producers. The concern is not whether the United States can build reactors. Washington has already taken significant steps to accelerate nuclear development through licensing reforms, financing programs, reactor life extensions, advanced reactor approvals, and support for restarting previously shuttered facilities. The concern is whether enough fuel will be available when those reactors require it. The broader geopolitical landscape is becoming increasingly important. China and Russia maintain strong positions across Kazakhstan, Namibia, Niger, and other key uranium-producing regions. Meanwhile, much of the Western world's supply strategy continues to depend heavily on Canada and Australia. While emerging jurisdictions, such as Botswana and Zambia, may continue future supply, significant new production remains years away. The uranium market has always been global, but it is becoming increasingly segmented. Origin requirements, geopolitical alliances, and long-term supply agreements are reducing the pool of available pounds. Countries that secure supply today may have significant advantages tomorrow. For investors, this matters because uranium is no longer simply a commodity story. It is becoming a strategic resource story. Companies with secure Western production, permitted projects, and long-term development pipelines may become increasingly valuable as governments focus not only on building reactors, but also on securing the fuel needed to operate them. India and France moved closer last week to expanding their nuclear partnership as officials from both countries advanced discussions surrounding reactor construction, nuclear technology development, and cooperation on future advanced reactor designs. The discussions included ongoing work at the Jaipur nuclear project, as well as collaboration involving small modular reactor technologies. On the surface, this looks like another international nuclear cooperation agreement. In reality, it may signal something much larger. For decades, India occupied a unique position within the global nuclear industry. Following its nuclear weapons testing program, the country remained largely outside the conventional framework governing international nuclear cooperation. Although important agreements helped to reintegrate India into the global nuclear marketplace beginning in 2007, significant barriers remained, particularly surrounding foreign participation, private investment, and liability rules. Those barriers are now being removed. Recent legislative changes have modernized India's nuclear regulatory framework and aligned it more closely with international standards. As a result, foreign companies with extensive reactor construction experience can now participate more fully in India's nuclear expansion plans. That matters because India's ambitions are enormous. The country has established a goal of reaching 100 gigawatts of nuclear generating capacity by 2047. To put that in perspective, that would represent roughly the equivalent of 100 large-scale AP1000 reactors. Achieving that objective will require vast amounts of capital, engineering expertise, and perhaps most importantly, uranium fuel. France appears eager to participate. Other Western reactor vendors and technology providers are likely to follow. The implications extend well beyond reactor construction. Every reactor built creates decades of future uranium demand. Unlike many proposed nuclear programs elsewhere, India has demonstrated a willingness to move aggressively once policy decisions are made. Recent statements regarding securing future uranium supply suggest fuel procurement is already becoming a priority. For investors, this matters because India is rapidly evolving from a future demand story into a present demand story. As regulatory barriers fall and international participation expands, one of the world's largest economies is positioning itself to become one of the world's largest consumers of uranium. Two significant corporate developments last week highlighted both the operational strength and strategic evolution underway across the uranium sector. First, Energy Fuels reported that its White Mesa mill is expected to produce approximately 1.6 million pounds of U3O8 by the end of June, effectively reaching the lower end of its full-year production guidance in just 6 months. The company continues to benefit from strong output at its Pinyon Plain and La Salle operations while maintaining exceptionally competitive production costs. Beyond uranium, Energy Fuels is also advancing major rare earth processing expansions at White Mesa, positioning the facility as a strategic North American critical minerals hub. At the same time, Forces Metals announced that uranium industry veteran John Borshoff will join the company as interim president and is expected to assume the roles of president and CEO and director following shareholder approval later this summer. Borshoff's track record includes building Paladin Energy into one of the most successful uranium companies of the previous cycle and transforming Deep Yellow from a small explorer into a multi-billion-dollar development company. Under his leadership, Forces plans to advance its Narasa project in Namibia while also evaluating mergers, acquisitions, and broader growth opportunities. For investors, the key takeaway is that the uranium sector is entering a phase where execution matters as much as discovery. Energy Fuels is demonstrating that Western production can scale profitably, while Forces is bringing in one of the industry's most proven builders to pursue growth during what many believe will be a prolonged uranium supply deficit. Together, these developments reflect a sector moving beyond speculation and increasingly focused on production, development, and long-term value creation.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by Purepoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit purepoint.ca. Join us again next Tuesday for another edition of Uranium Spotlight.